Good morning yet again, guys. It ain't even lunch, and I'm on video number 3 today. But this is something that I needed to put out to you too. And thank you to William Harding for putting this in the comments and alerting me to this. So I went and kind of did some digging on it here real quick, and he had linked to a video from Economic Ninja. And if you guys watch his channel, he does a lot of good stuff too. I don't watch him a lot, but I do pay attention to some of his videos, and most of the stuff he's got out there is pretty good. So, just like most of everything, not everything, just like everything I put out isn't always good. So, yeah. But so what he was talking about was a tax that y'all don't know about, that probably don't know about, that's coming starting January 1st. Now, some of y'all use PayPal, Venmo, Cash App, Zelle, whatever would be. And if you know this, if you don't, there's 2 ways that you can send money to somebody. You can either send it as friends and family, and there's no fee. So if you send $10 to somebody, they get the $10. If you send it as paying for goods and services, then PayPal, Venmo, whoever it is, charges a fee for it, 2 to 3% or whatever it would be. So the person that you sent $10 maybe collects $9.40 or something like that. Who knows what it is exactly. So that kind of sucks right off the get-go. All right, that you want to give your friend back the $10. See the commercials. You want to give your friend back the $10. Oh, just do it, pop, and you're there. And I see this out of my daughter all the time. Okay, is she'll Venmo or PayPal or whatever it is. She went out to dinner with friends, and all her friend put all the dinner on their credit card because maybe they get the 3% cash back or something like that, and then the other friends, I'll go, okay, fine, here's my $12.54 or whatever it is for my dinner. And, they all pay back, and everybody comes out fine that way, rather than cash and change and all this sort of crap. Well, it's used a lot like that, but people use Venmo, PayPal, whatever, for many other things. When I send my daughter money for, hey, Dad, I need, a school book, or the good one, when I was giving her the money for her part of tuition when she was still in school, I just give it to her via PayPal. Okay. My portion was $7,000 a year. Okay. Here's a $7,000 PayPal that I just saved up over the course of the year to pay for her next year's tuition, room and board, and all that sort of stuff. Now, if you think about, take out 2% out of $7,000, there's $140. All right, that's got to go somewhere. But where it's going to change now is, not only are you going to pay the fee, and so that person who receives the money receives less if you send it to them as payment for goods and services and not as friends and family. That person in 2022, effective January 1st, is now going to get a tax form for it, and they are going to have to pay income tax on any money received as earnings. Okay. Now, think about this. You and your buddy go to the bar on Friday night. He pays for the beers. You give him $20 back or whatever it is, and he gets a 1099 if he gets more than $600 a year. Okay, so if you give him $20 a year, or $20 every Friday, you do it this way every Friday, for example, he puts his credit card to run your tab, you give him $20 back. Great, there's $1,040. At the end of the year, he's going to have to pay taxes on that money. It wasn't earnings, it was just you paying your half of your bar tab, or whatever it is. All right, so think about all these other ways. You go to a garage sale, where you have a garage sale, and somebody comes up to you and says, Hey, I want that lawnmower. What, how much you want for it? $100. Will you take Venmo? Sure. Dump, 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 dump. There you go. There's your $100 in Venmo. And you think this is cool. I don't have all this extra cash. It just goes straight in my bank account, whatever it would be. Until the end of the year rolls along and the IRS comes and says, Mr. Jones, here's your tax form for what you made at your garage sale this year. Oh, do you do garage sales as a business? Well, now you have to pay self-employment tax. Oh, Mr. Jones, can we see your tax ID number for this? Did you register as a business? You see where I'm going with this? A lot of people want to use PayPal, Venmo, or whatever for the convenience. We do here on the channel, just like I said, with the food drive and the toy drive we did and everything. I suggested to everybody, hey, send the money via PayPal or whatever it would be, because more money gets to the food drive than goes into YouTube's pocket. Okay. And a lot of you sent it as friends and family. And, if you donated $10, $10 came to me. If you donated as payment for goods and services, I got, $9.38 or whatever it was. And that was why, we had this goofy number. But he goes, why was it $1,031.18 or whatever the hell the number was? It wasn't like somebody donated 18 cents. It was after the fees. So you look at, here's another way that they are going to control your finances. And another way where cash in hand, whatever that currency may be, like I said in the mid-morning video, rice, salt, acorns, whatever the hell it is. All right. That's a private transaction between you and, between buyer and seller. The government doesn't need to know about it. All right. Again, that lawnmower that you sold at the garage sale for $100. Let's say you paid $400 for it when you got it originally. You weren't allowed to write that off as an expense, but now you have to claim that $400 as income. So this is where you get into double taxation, guys. Because when you bought that lawnmower in the first place, you purchased that lawnmower with after-tax money. Okay? Your paycheck has taxes withheld. You filed your income tax or whatever, and you paid tax. You made $440 gross, and you collected $400. Let's just say you paid 10% tax. Okay. Not playing argument about the finite money here, guys. Just point. So you already paid tax on that money. Now, when you sell that lawnmower, you've got to pay tax on that money again. Double taxation. There's a little problem with that in the Constitution. But nobody's going to bring that one up. And of course, nobody's even going to realize this happens, because if it wasn't for William telling me about this and me watching Economic Ninja's video, which gave me the link, which I'll provide below, to the article on LinkedIn about it, I would have never known this existed. Why? Did the mainstream media tell us about it? Nope. Okay. Has anybody said anything about it? Nope. So when's the first time you're going to find out about it? Probably when you go file your 2022 taxes, some 18 months from now, and all of a sudden in the mail, you get this 1099-K that says, we show you made $11,000. And you're going, I didn't make $11,000 anywhere. It's like, oh, Dad gave me tuition money. Sorry, that's taxable income to you, $7,000. This is another problem with, again, like I said, CBDC. This one isn't centralized bank digital currency, but this is a problem with digital currency, digital transactions. Anything and everything you guys do that is electronic is tracked, all right? You put it on your Visa card. There's a record of it. You go to the grocery store and use your little coupon card, the little thing you keep on your key fob or whatever it is. That's tracked. They know how many pounds of butter you buy every month, okay? Anything that you do that's digital is tracked. And when it comes to a point of taxing, you know as well as I do that government officials are going to do whatever they can to track down anything and everything they can and tax you on it. This is the problem we have, okay? We are overtaxed and underrepresented. Kind of reminds me of a little event in Boston, maybe about 250 years ago. Doesn't it? We'll be back when more stuff comes out today. It looks like it's going to be a busy day. Pinball out.